Hi everybody. I'm gonna go over this simple process that helped me stop blowing accounts, and I'm gonna go over some examples with you. Hopefully y'all took some time off the charts this weekend, went out, touched the grass, or see family members, went to gym, etc. etc. So yeah, I'm gonna go over it real quick. First of all, thank you for everybody who subbed, watched, left comments. I am overwhelmed and extremely grateful for the amount of love and support I've gotten in less than a week. I think we got over, it's crazy the amount of growth that I got. I could have never imagined this much growth. We got over 40,000 views, over 2,000 subscribers, and it's just the amount of comments that I'm getting that people are finding this helpful. It's just amazing. And I'm gonna go over a couple of things today. One of them is the model, and I'm gonna tell you where you can find the cheat sheet so you can download it, have it with you. I'm gonna over the community that I'm going to make, and also show you some quick examples of it. So without further ado, let's get into it. Yeah. So it's pretty much simple. This is like what I do every day. It's a CCT model. It's not something that I came up with. It's by Cramson Capital, and also there's some level of ICC, indication, correction, and continuation that goes into it. So these two candles, I get a lot of comments that people asking, oh, does it work on daily? Does it work on 4 hour? Does it work on hourly? Yes, it works on any time frame because times are fractal. And I'm going to show you examples of Bitcoin, NQ, some forex pairs possibly, and we'll go from there. So quick overview. So these two candles can be a daily, 4 hour, hourly, doesn't really matter. Once it closes, you draw your line, you draw your POI, you set your alert. It can be daily, hourly, again 4 hours POI, and you just wait for the price to come back to your hourly. And if it's a sell model, it's the other way around. And the entry model, a lot of people were confused. So my entry model is very simple. The entry model has to be a engulfing candle, meaning the candle has to be bigger than the previous red or blue candle, or inverse fair value gap, or it can be both. If you get both, it's even a stronger sign, and it has to close above the POI. So those three. So engulfing candle, inverse fair value, or both, and it has to close above the POI. Once it closes above it, we enter. Put a stop loss in the most recent swing low or swing high, depending on if you're buying or selling, and we simply just target the hourly high, 4 hour high, or the daily high. That's it, simple as that. So let's get right into it. So this is the MNQ chart, and as you can see, let's say we go here. Let's say this is our POI. As you can see, on the daily, as long as it gets close to the same area, you're fine. Same goes with the 4 hour, because you're not gonna get like a perfect example every time, and that's how it goes. As you can see, if you were trading daily, swing trading MNQ, break through it, came back above it on a 15-minute and went back down. And you just go down to 15-minute. If I can find it, there you go. There it is. So it came back up around 2 in the afternoon actually. So very interesting. So we close above it, close below it. This one didn't engulf this candle and didn't close below the POI, but this one not only closed below the POI, it also engulfed this candle as well. So you have your two confluences, and it's pretty easy. You can just enter here, put your stop loss on the most recent swing high, which is only 177 ticks. So if you trade micros or even a mini, you're not gonna blow the count even at 177 ticks. and you just target the most recent swing high or the swing low on that same entry model. Or you can just hold it. So you can hold it here until here, take profit, and then keep the rest at the break even. See, it never came to your break even entry. And if you would have put it here, look at that. That is 2,198 ticks. And if you trade live account, let's say you trade live account with only $2,000, you can trade like a mini contract, which is very dangerous. Don't do it. But assuming you have a $2,000 account and you trade one mini contract, each mini contract is $5 per tick. So on a 21.98, so you would have gotten, let me see, so 21.98 times 5, so you would have made $10,000 within a day, assuming you had enough in your account to be able to withstand the margin carryover for the overnight. But that's for the swing trade. You don't necessarily need that much if you're trading a prop account. If you're trading a prop account, all you need to either pass the account or gain enough for the day. When is the end of the day? So the end of the day is right around here. So that would have been perfect for you, even on a 15-minute. So this is the most recent swing lows here. Let me zoom in so y'all can see it better. So this is the most recent red candle. Oops. I'd like to make this one. There it is. And then you would have hit it before the end of the day, before the market closes. And that's 375 ticks. And you would have been done for the day. And all you would have done, just set an alert, wait for the candle closure. If it goes below it, that's the indication that we're going to continue taking that. That's it, simple as that. Let's see if we can find a 4-hour example on it now. Let's see. So same goes here. I don't like to trade the 4-hour, but if you're patient with it, it shows up. Same goes here. We kind of close below it. Sometimes you get like multiple areas. Another thing that you notice, whenever there's an area that acts as a support, if you break through it and close below it, then that previous area that was support, it becomes the resistance. So close below it, you can sell some around here, and then you just target this area. And the same goes when we are buying. This whole area was acting as a resistance. Nope. And then we broke above it. We came back to it, to this area. And then what you can do, you just wait for it to close above it. Right here, close above it. That is. So we paired the 4-hour with the 5-minute. Right here in this candle, we close above it. Oh, another little tiny nugget. So whenever we close above it, we push through it extremely strong. You have to think of it, since the times are fractal, what we do on the hourly, 4-hour, and the daily, it does the same thing on the 5-minute, 1-minute, and 15-minute. let's say for example, you don't want to get here because your risk to reward ratio is gonna be is not gonna be pretty. So what I do in this type of scenario, I either wait for it to come back and close below that area again, and then buy at a better place. So you would have gotten here, here, and here. See, that's a better risk to reward ratio. But even further than that, since the same thing applies, boom, 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 we come here and then continue. Same thing applies here. Sometimes the price gives you some sort of fair value gap somewhere around here. So in this case, we got a 5-minute fair value gap right here. So sometimes what I do is I put my I put a limit order. I put a limit order somewhere in the middle of that fair value gap, or at the bottom of it, depending on how big the fair value gap is. And then I put my stop loss at the most recent swing low of the candle that created the fair value gap. Not all the way down at the most swing low, but the most recent swing low. Or sometimes, if you want to be aggressive, at the top of the fair value gap, which I don't usually do it because there's a more high chance of being wicked out. Unless it's a huge fair value gap, then in that case, I put it at the end of the fair value gap. Or at the most recent swing low is also good, and that gives you even a better risk to reward ratio. It's like a little extra nugget, but if you want to keep it simple, just wait for it to close and then get in and then put two. And then if I'm scalping, as soon as I reach somewhere halfway through, I just move my stop loss to the break even, because you don't know, the price may just come, take your stop loss and continue. But if the price retraces that much deep, that means there's not enough buyers. So I don't even want to be in that trade in that case. Then. Let me see if I can show you an hourly example from the most recent price action. There you go. This is a trade that I actually took. So came here, closed above it. This one didn't close above it, but this one did close above it. So, oops. Put it here, 1 hour. Go back to 1 minute. Let's see if I can find it. Yeah, I took this trade actually. Yeah, I think I took this trade on Wednesday or Thursday. And I was at work, so I got the alert. Came here. We closed above it, but we didn't flip this candle. Once we closed above this one, I actually got into this trade early. I got into this trade on this candle, which is a little bit more dangerous. You don't want to do it, but sometimes you can kind of trade what you see. That's what I always preach. When you see this much momentum towards the upwards, you know we're gonna go hit one of these targets, either this one or this one. So I didn't care. I was like, we got the retracement, the candle closed above it, I'm getting in. But it's usually better if the candle gets flipped over with power and flow. So I believe I got in somewhere around here. Got in here. Put my stop loss. I put my stop loss at this most recent swing low. And then I put this was my first take profit. And this was my, around here, that was my second take profit. So we missed it and then we eventually got there. Oh, another thing, as soon as we start going up, when we broke above this most recent swing low on the 1 minute, then I immediately put my break even, not at the break even, sorry. Then I put my stop loss from this swing low to this swing low. So I'm constantly moving my stop loss dynamically to where the price is not supposed to come down and take that area, because it should act as a point of invalidation, meaning if the price comes down to that area, that means your trade is no longer valid. Because if you're bullish, we shouldn't come and visit and take that most recent swing low again. That means there's too many sellers and the price is going to be choppy, and I don't want to be in that trade. So I de-risk constantly. So if there's a multiple swing low, every time we make a new swing low, I move my stop loss right here. Let's say we make another swing low here, then I move my, just get rid of this, then I move my stop loss here. Or you can move your stop loss here, somewhere around here. You will be safe until it hits your target. And once we are here, your brain start to play a lot of different emotions in your head. What if I'm wrong? Oh no, we didn't take this recent swing high. I'm gonna trail my stop loss. I'm trailing my stop loss. You end up trailing your stop loss too aggressively, and you get taken out of the trade, which is still good. You're still in profit, but you would miss the bigger move. So there it is. So I went over a daily, 4-hour, and 1-hour example. Let me go over a Bitcoin example real quick. And there it is. So we broke through this line. So yeah, oops. So we broke through. So this was a support, and then boom, we broke through it. Indication, correction, continuation. And I took this trade on a cash account. Actually, I took it from here to here. And see, I'm flexible with where I'm drawing my line. So just because this is the one that we broke through, that doesn't mean I'm gonna 100% gonna have to be here, even though you would have been fine. So you can draw multiple lines. Either one you would have been fine. You can draw it here, because this is the area we broke through. And another thing is, if the indication is about twice the size, it's usually a good sign that it's going to come back. So for example, if from here to here is 20 point, and from here to here is another 20 point, if combined is about 40 point, we always come down to that 50% mark before we go down. It's just price action. It works on pretty much every asset, stocks, Bitcoin, crypto, forex, anywhere you can. So you go down to 15 minute. Let's find that line right here. So we close above it, close below it. This is the most recent candle. Not only we engulf it, we close below it. You get in right here, and I put my stop loss right here, and I target this area. And as soon as we took out this one or this one, then I put my stop loss to this most recent swing low. Once we take out this one, then I put it at the break even. And once we took out this one, then I put my stop loss at this most recent swing high. It's kind of, so you get the idea. Let's go to my forex pair, Euro USD. There it is. Go to the daily. So Euro USD and JPP USD and USD JPY, those are my three favorite. Those are the ones that usually moves the cleanest. We broke through here. We broke through, let's say, this one. So whatever line that we broke through. So these are the two that we broke through. Now the 15 minute. See, could have gotten on this candle, stop loss right here, and then another thing somebody asked was like, why, if there is no target here, where do I target? So if there is no clear close target in here. Oops, it's not long. So if there's no clear target for me, I either get out on 1-to-1 or I get out on some sort of psychological number. So it has to be a round number, like 20, 30, 50, also 15, 25. Like the institutions and the algorithm likes to get out at a certain point, like a certain psychological number. And the more you trade in, the more you'll understand it. But let's say you wanted to scalp this. There's always some sort of a scalping opportunity. Let's see, this is 2 a.m. Yeah, this is 9 a.m. Yeah, let's say you would have woken up around here because this is the 9 a.m. candle. If you want to scalp it, you don't want to intraday trade it, you just draw your line, 9 a.m. Candle closed above the previous one, you go back to 1 minute. Boom. Oh, this is beautiful. Because we not only close above the PY, we engulf the previous candle, and we also had an inverse for value. Yeah. So this is like 100% gonna hit our liquidity. So just put here, here to here, just like that. And this can be your first take profit. Second or third can be some sort of psychological number. Let's say 1740 or 1750. Yeah. So you could have gotten out the remaining on the 1750. See, right around 1750. Then the price sold off a little bit and then continued. Just like that. So, yeah. So it works on pretty much everything. I showed you too many examples on it. So I showed you NQ. It works on gold, but there's no point of doing it. I don't want to make this video longer than it has to be. Oh, another thing is that if you want this cheat sheet, and I'm going to add even more cheat sheet to it, it's going to be in a school community. You can I'm gonna leave the link down below in the comment section and in my description, and also on the page, on the YouTube page. Go ahead and join. It's free. Go ahead and join, and I'm going to add more content in there, more cheat sheet for you guys, because there's always more details. There's a little bit more that goes into it. And the reason why you want to join a community is because if you, for example, if you do it by yourself, you make one mistake in a day, or you have one win in a day. So you just either learned something that day, or you had some sort of gain that day, and it's just one experience, and that's it. Imagine if you're in a community with, like, let's say 10 active members, and there are 10 people who make different type of mistakes in a day, and they all share it. Now all 10 of you guys just learn 10 different things not to do. Or let's say all of you guys win, and you share your wins. Oh, I took this trade and I won this, and I took it at this entry, put my stop loss here and there, and now you have 10 different experience, either as a lesson or as a gain. That's the power of having a community. So I was thinking of making a Telegram group chat, but the issue with a Telegram and Discord is, let's say you get on it for 5 minutes at some random time. You see the most recent chat. You either see some sort of value in it, you get involved, or you ask your question and you wait for an answer and you come back. But there could be somebody who left a extremely meaningful and a great lesson in the chat, in either the Telegram or in the Discord chat. But if you don't open it and you don't get notified on it, you're gonna miss out on it. Let's say you miss out on 10 different good lessons that somebody else left the chat. You're gonna miss out on all of those. The good thing about a school community is, if you have some sort of community, you can leave your post with your screenshot, entry, and everything, and there are 10 or 20 other people can leave a comment or like it, and the school community will rank it based on the like and the comment and all that, and you're not gonna miss it at the end of the day. Let's say you work all day, you took one or two trade, you're back at it at night to share your mistakes or your gains, and you're gonna see all the top members who made a mistake or gained or something, and you get to learn off all of those. And if you want to make it like a, if you want to chat, you chat on that specific post instead of having a post and then you have to scroll all the way down or all the way up to find what you're looking for. This way you're not going to miss out on others people's experience or other people's mistake. That's why I like a school community. That's why I made the school community instead of the Discord and the Telegram, because I was thinking, I was like, how can I make the best community possible, and how can I make it so in a way that people don't miss out valuable content. And school is the way to go, because I've been part of different school community, and school beats Telegram and Discord and Facebook groups by far, and it's made by the legendary entrepreneur Sam Ovens. And if you've been in that space, you know who he is. So yeah, join the group, it's free. I'm going to have some classroom, add my cheat sheets in here. We're gonna have some sort of live calls in here, and you're gonna have some sort of members in here. You're gonna see where everybody's from, and you can still chat with other people if you want to, like send somebody a direct message. You can do it. And I made some fun level. So the more you have engagement, the more level you are going to gain. And I made them funny levels. So a candy destroyer, revenge clicker, and then you go all the way down to a simple trader, and at each level you get to open some sort of prize, either a one-on-one call or or something. I'll come up with something. I don't know yet, but we're gonna have a lot of fun. I'm very excited about this community. I can't wait for everybody to join. Everybody to start sharing their trades, sharing their screenshot, sharing their wins, their loss, their mistake, and we all get to learn together and grow together as some sort of CCT family, CCT fam, you know. So yeah, just check out the description, check out the comment section, and check out my links. Follow my X, follow the IG if you have any specific question. Join the community. That way you can send me a direct message, or just go over the classroom, go over all the cheat sheet that you can download, and I'll add more to it. I just made this group, and look, we already have 5 members. So yeah, just join in and let me know what you think. Hopefully this was valuable again. And again, thank you. I love you guys. Thank you for everybody who left comments, subscribe, watch the video. It's crazy the amount of growth that I got in just only 1 week. I'm about to get monetized on YouTube too, so hopefully I don't need to use it. But yeah, that's it. Love you guys. Peace. See you guys in the next one.